Deputy Owen Murphy, you have 6 minutes.
Chairman, and thank you to the witness. I just wanted to clarify something, if I may. We heard earlier that 90% of investment volumes in the period 2002 to 2007 were from Irish buyers. Do we know what the percentage is today?
We do. We now have a map of Europe with dots for every jurisdiction, and I'm trying to remember the numbers off the top of my head, but roughly speaking it's about 50-50 at this point, with quite a bit of that coming from the US, because you have firms like US firms that are domiciled now in Ireland. The Irish piece would be split again 50-50 between the Irish REITs and Irish investors. So for example, the REITs, the money going into those REITs is invariably not Irish, but they're Irish entities. They're listed on the stock exchange. So we would tend to count them, but separate that figure out because it's Irish, but the money's coming in internationally.
So moving from that 10% to what is now around perhaps the 50% mark, would that be normal then in terms of other countries? And I mean, has the pendulum swung in the other direction in terms of...
The pendulum has probably swung a little bit more because, as I said, if you look right across Europe, it tends to be about 35% probably now. But I suppose something we've seen with global capital flows over the last 12 months is that there's money coming into European real estate from lots of different jurisdictions. And I suppose our sense is that going forward, the jurisdictions might change and you might get more Asian money coming into the Irish market, particularly Asian investors that are now familiar with London and are seeing good opportunities in the Irish market, that we could well attract some of that money to Ireland. And
the money flowing into Europe at the moment in the past 12 months, I mean, in what way is that qualitatively different to the money flowing in at the beginning of the last decade?
It's radically different in that it's not debt funded. It's primarily equity, and it's coming from lots of different jurisdictions, and invariably it's coming from types of investors who maybe haven't historically invested in real estate. But what's particularly attractive about real estate at the moment is the very unique interest rate environment we're in. If you have 10-year bond rates at sub 1% and you have real estate throwing off 5 or 6%, comparatively, real estate looks attractive, and then you have the ability to leverage on that. So real estate right across Europe is booming at the moment. We're at a very unique juncture because of the low interest rate environment.
Okay, thank you. I want to move back then to the period before 2008 and the CBRE reports, which we have excerpts from.
Yeah.
You authored those reports, then?
Every one of them, yeah.
In 2006, and you have it here on page 5, in November, you say that sale and leaseback transactions, including those by the country's 2 main banks, which have dominated the headlines in recent weeks, have between them totaled $1 billion, which is in excess of the total size of the Irish investment market only 3 years ago. What are you saying when you write that, and who are you saying it to?
I suppose we're commenting because you wouldn't generally have had quite a lot of sale and leaseback activity happening in the Irish market.
What to you does that indicate, a sale and leaseback agreement, in terms of the health of the market?
I wouldn't relate it to the health of the market. I think at that particular point in time, if we look at who was doing the sale and leasebacks, invariably some of it was coming from the domestic banks. I don't think it was a conscious decision to get out because the market looks like it's turning. I think it was simply in an effort to generate more liquidity, which in turn they rolled out into more lending. I don't think it was a conscious decision. I know, some people will speculate and say that was the banks saying that they were getting out of the Irish market because they could see it coming down the tracks. I think that clearly wasn't correct. I think it was simply a decision to get out of real estate and get equity in to concentrate on their core business.
When you write that, though, are you writing it? Is it a value-free statement? Is it a fact that you're writing, or are you sending a warning signal there to people within your own company or to the market in general?
We're simply commenting factually. If because we have access to all the transactional data, if you split out the sale and leasebacks, they're accounting for a big portion of the market at the moment. It's a fact at that point in time. It wasn't a signal or anything of that nature.
Okay, and then actually, just as it happens below it for January 2007, thank you, Chair. It says, it is now the duty of the development community in Ireland to adopt a realistic approach and put the brakes on the quantum of annual housing completions to avoid oversupply occurring in the medium term. The duty of the development community. The development community is a series of individual actors. It's a series of individual actors acting in their own interests. But you thought they had a duty to restrict what they were doing. In terms of your industry, what duties did you have at the time?
I suppose our duty, we are a multidisciplinary firm, so we're buying property, selling property, we're acting for clients. It's not our duty to tell the market what to build or where to build it. And I think from a research point of view or a commentary point of view, we were simply pointing out we're building too much. We need to rein this in, because if we're to go into the normal cycle, there's potential to exacerbate that if we keep building at the pace we're building. It's not sustainable.
You felt that developers had to rein themselves in rather than another actor?
Well, I think when we say the development community, we're talking about everybody within the property umbrella, be that developers, planners. You know, it's not just developers per se,
and you're
it's the wider
integral to that community, aren't you? Not an integral part of the development community?
Not development, we don't develop.
Valuations for sites or, potential...
Again, a valuer values a piece of land. They're not giving advice to the client to go on site or not to go on site or what volume to build. They're simply valuing the real estate.
Do you think your professional body had a duty to go to the government and inform them of the kinds of things that you were reporting or other companies were reporting in your industry?
It wouldn't have been down to individual firms such as yourself to do it. The people like the Society of Chartered Surveyors or other member firms may well have gone to government. I would have thought government should have come to them, but possibly that happened. But certainly our firm was never asked for our opinion or our view.
Thank you, Chairman. So final questions in relation to your opening statement, first page, underneath overview of the Irish CRE market. You state that in Ireland's case, in the period up to 2008, these three distinct elements effectively merged. I'm just wondering what the significance of that mergement, the three pieces coming together, what that means for the property market in terms of a change and the dangers associated with that.
I think when you look internationally, you tend to have three very distinct sectors. So you have developers who provide the product, you then have occupiers who come in and occupy that, and thirdly you have professional investors who come in and buy the income-producing asset to throw off returns. And I think what happened in Ireland was, because there was an availability of debt, a lot of the developers built the stock, got it let up, and then held on to that for their own personal investment, and that would be quite unusual. So we would have been asked consistently why there weren't more shopping centres trading, for example, in Ireland, considering the amount we were building, because in most other markets they would be built, let up, and then sold on. And what was happening is Ireland, they were built, let up, and then the developer held on to that for their own personal investment and invariably used that to borrow again and develop other. So I think that was quite unusual. I think that was what I was pointing out there.
And that merging of those elements, about when did that begin to take place?
I don't know that I could point to a particular point in time, but from 2002, 2003 onwards, I think that would have been quite evident.
Thank you.